All right, let's kick off with the stock of the day, one that I choose that's in the news. Fonterra reiterating full-year guidance, but warn there will be significant pressure on earnings in the last quarter of the year. This is, as it reports, an 18% pop in underlying earnings for the first 9 months of the fiscal year, boosted by strong demand for its dairy products in China. Yes, in China, and higher milk prices. When anything to do with China is on the skids at the moment, they're saying they're doing all right. What do you think of the announcement and also Fonterra, Michael?
Look, I think the announcement is very good for them in that everyone was a bit worried that margins were going to be under significant pressure, which they still are, but everyone was fearing that there was going to be a further deterioration in things like volumes and some of the prices globally. It's an interesting company in that it's a very, very dominant player in New Zealand. I think it could be their biggest company. Employs a lot of people. I think it's 90% owned as a co-op by farmers in New Zealand, but Australian investors can get access to it via this listing. And it does give them exposure to the dairy industry, which is very, very cyclical. So it's not an area.
It looks fairly illiquid too.
That's the problem with this particular instrument. But it's a very cyclical industry. It's very challenging. It depends a lot on currency and international milk prices, which is how they set their milk price. But it's a company that is in a very dominant position. I think they make up about 30-40% of global supply of milk. So it is a premium producer.
30 to 40% of
global
supply.
It's pretty crazy. So
that's amazing.
Yeah, so deregulated years ago in New Zealand was once upon a time owned by the government, but since then they've basically given it out to the farmers and now for investors in Australia.
Yeah, and if you look at that 5-year chart, it was way up when China was taking everything and infant formula, dairy products. Look at that, almost $6, now down to $3.50. Is it a recovery play? Andrew Page?
They certainly have been trying to turn it around. I mean, it's a big business, but it's a hard business, So it's easy to sort of get excited about, wow, 18% lift in profits. That's great, but it's also, I think it pays to sort of step back and look at how this has performed longer term. The terms of volume that they're selling hasn't changed much in the last 4 years or so. Their top line growth has been virtually flat. It's some very, very modest growth, but then the margins jump all over the place too, because they're a commodity provider and they don't get to charge whatever they want for that kind of stuff. So very, very tough business. They're going in the process of a big capital restructure at the moment. China is one of these things where it is great when China likes you and demands. I mean, what do we know here in Australia with how that's gone with Treasury Wines and others, and so and they have about I think it's close to a third of their revenue comes from China. So maybe their government isn't as antagonistic as ours. Maybe
because it's New Zealand.
Because it's
New New Zealand company.
So maybe that's okay, but it's just not an attractive business for me. When you sort of look out long term, it's like, where's the growth going to come from? By the way, you can invest in a very low growth or even negative growth company and still do well if you pay enough of a discount for that. I just don't think it's there in the price. So no, it's a pass for me.
All right.